This is the briefing for Friday, February 10th. Before I get into the briefing, I want to do a little bit of a commercial here. I'm not sure whether those of you who have newly subscribed know that I wrote a book that has gotten some pretty good feedback. At least I've gotten feedback from people on it. Why Traders Fail, Planning Your Way to Success. You can get it on Amazon, and right now it's at a discount. So if you're interested in it, it talks about planning and how to do a trade plan. And more importantly, it talks about how to control the trader, which is typically you. And it's really I think it's a pretty good book. So if you're interested in it, you can get it on Amazon. Joseph J. Murdy's or Why Traders Fail: Planning Your Way to Success. And I'll be coming out with a few other books. I've got another one in the process, which is on counter trend rotations, which I think is going to be very interesting also. Now, onto today's market action. You can see that most of the day we spent in a pause area. So you can see the rotation. This is the spiders on a 15-minute. This is the Qs on a 15-minute chart. And you can see we closed near the upper extreme of this. So that closing, the high today, is going to be important for Monday's trading, because you can see that we closed really at 408 in the 408 area, and the important key reference area in the spiders is the 410 area. Closed really right at 300, or right at the 300 area in the Qs, and that's a pretty critical, important area as well. So that's really going to be an important aspect. Now, when we open today, if you remember in last night's briefing, I talked about the fact that we should expect lower prices, but to watch carefully to see if there was a divergence in breadth, because that would suggest some type of pause or rotation back up again. And you can see right at the low, it was right at the open here. You can see breadth was stronger than it was in yesterday's trading, and the same thing occurred in the NASDAQ, suggesting that we were going to see some type of rotation up or some type of pause. I was short coming into the morning, and I exited within the first 15 minutes of trading when I saw that divergence in breadth. So we'll see what happens here. Now, if we trade much above the upper extreme of these two instruments, then that's going to suggest potentially these spiders are going to test the 410 area, which is a really important resistance area at this point in time. Now, looking at where we are in that, you can see the 410 area was support. The spiders broke through it, but now we're coming back and approaching it. Now, there's intermarket divergences here, and you can see that pretty clearly. The same level of support in the Qs is right at the 295 area, and you can see that the Qs have come down and tried to test that area in today's trading. And the same thing with the Russell, the IWM. We came down and tested it in yesterday's trading, and then spent the day today rotating around that area. So that's going to be really important for Monday's trading. The Qs showing a little bit more strength in a price development perspective in terms of the intermarket divergences. The spiders showing a little more weakness, and the Russell kind of right in the middle, just rotating right around this area of pause here. So it's going to be important. Now, as I spoke last night, I also expressed a concern that this move to the downside is really on declining volume. We had declining volume in today's trading as well. You can see that right through here. This is volume on the Qs, volume on the spiders, and this is volume on the Russell. So this sell-off is not attracting new sellers. So the longer term perspective that we've been looking at, and you know from previous briefings that I'm still basically bearish this market, but I have to hold out the possibility that this is a run, pause, run, pause, run, pause, where this is a downtrend of lower highs and lower lows. And this could be a greater degree time and price counter trend rotation, where there is equality between legs 1 and 3 that would project it to go up to about the 437 to 440 area, just slightly taking out this high. Now, it doesn't have to go there, but there's a high probability that there is equality between legs 1 and 3, so I'm going to be watching it very carefully. So you can see even on a weekly chart, this is this week's trading, and you can see what's happening with volume falling off on a weekly basis. The other aspect of this is on a longer term basis, on a weekly chart, you can see this move right outside of this area of, this is 3 weeks of trading where we really went nowhere. But then when we opened up here and we broke out of that area, you can see that breadth started to decline and continued to decline going into the high of last week. So we've got a little bit of conflict between the market internals also. This is a market that really is unsure of whether value is higher or value is lower. Now, going back to the daily chart, you can see that the spiders really took out slightly yesterday's low, volume falling off, breadth still declining but diverging in today's trading, which we had to expect, and the NASDAQ rotating right around this 300 area. NASDAQ had a day that neither buyers nor sellers could gain control. You can see there's a selling tail at the top of the candle and a buying tail at the lower end of the candle, and the Russell just spent the whole day just rotating right around that 190 level as well. Looking at where we were in terms of overbought and oversold, we were slightly oversold yesterday. This is the NYSE and this is the NASDAQ. So you can see we worked off some of that oversold condition, not so much in the NASDAQ, but this basically gives us the indication that really the market could go in either direction on Monday. So what's going to be important on Monday is what happens, especially with the spiders at 410. If it trades above and closes above 410, then that still makes the longer term analysis of a three-step counter trend rotation to the downtrend viable. It makes it still has viability then. If we close below 405 in the spiders, and if the Qs trade and close below 295 and the Russell closes below 190, that would lower the probabilities of that analysis of a longer term counter trend rotation and suggest the potential that the next leg down potentially, and this I say potentially, to test the October lows is in the process. Now, there are other levels of support that the market would have to break through, and I'll discuss those if and when that should happen. It should be a very important day on Monday, especially I'm going to be watching this area right here with the spiders at 410. Have a great weekend, and I'll talk to you again on Monday.